of the EV component to the various EV companies. As such, may see some softness in Sona BLW or Motherson Sumi. Apart from that, China market is up substantially, over 1.5%, mainly driven by the RRR cut by the central bank over there, which has taken the overall market up and which has infused over 1 trillion yuan into the economy. That is effective from 5th or 7th February. So, and also indicated that they will be coming up with more support to the economy for revival. So, as such, we are getting some positive indications from the Asian market, and that can get reflected into Indian market as well. I'll request technical team to take up from here.
Yeah, thank you, sir. Good morning, all of you. See, yesterday we saw some bounce back, and Nifty managed to sustain important level 21,415 above. Today's we monthly expiry, but if Nifty failed to manage this level, 21,370, 21,450 level in closing basis, then we expect further sell off again start below the 21,370. If Nifty break that level anytime in first half, then second half we'll see some pressure towards 21,270, 21,200 and downside. Upside, first immediate resistance place around 21,540 and 21,670 next consecutive resistance. So today we expect flattish open and remain a sideways during the day. But if Nifty break 21,370 in intraday session and first half, then we expect further sell off. Otherwise, trading within that range only. Bank Nifty also trading near the support zone. Yesterday, we saw some bounce back rally, but managed to sustain the long term moving average. But first immediate resistance place around 44,600 and 800 in downside. Bank Nifty break this level in first half, then we expect the further sell off towards 44,000 and 43,540 at downside. Upside intraday first immediate resistance place around 45 640 and then 46 120. So both index trading near the crucial level. If is sustained, then we expect further rally. Otherwise, again we see the some pressure in both the index. Fin Nifty also yesterday we saw some positive momentum, but this upside again facing the immediate resistance towards 20,340 and 20,400 in upside. And intraday, first immediate support place around 20,200, and below that, then again see some pressure in this Fin Nifty also towards 19,810 at downside. So all three index trading a crucial level. If manage to sustain, then we expect for next week in positive side. Otherwise, we saw some pressure to be continue in a few trading session also. Stock specific, Godrej property looks weak. We already given call in Godrej property. We expect some pressure to be continue in this stock because trading in overbought zone, and next immediate support and target is 2200 and 2140 at downside. Then ICICI Bank, we saw that last two trading session see some pressure, but trading near the important support zone that's come around 990. If ICICI break this level, then we expect further pressure towards 970, 960 at downside. Upside, first immediate support resistance place around 1020. If manage to sustain above, then we expect further rally. Otherwise, we saw some pressure in ICICI. Positive side, National LM looks positive. Yesterday, we saw that bounce back in this counter, but 140 is the next immediate resistance. Is trading above, then we expect further rally towards 150, 154. Second, Vedanta also looks positive, trading the long-term moving average 200 DMA. And yesterday we saw that the managed to close sustained about these 200 DMA, and we expect this momentum to be continued towards 278, 280 and upside. First immediate support place around 256 and 254 at downside. That's it for technical. Derivative guy can carry.
Thank you. Good morning, everyone. So on the derivatives front, as we witnessed yesterday, that Nifty managed to get a pullback from the supportive range of 21,200 to 21,000 mark. And 21,000 mark, we are seeing that the OI position for next 3 months of a series is continuously holding the support of 21,000 mark. But on the upside, for this series of for next 1 to 2 weeks, we are seeing that 21,600 to 700 is a resistance zone for the Nifty, which is very much important for the Nifty to get clear about that level for the fresh long position need to be created in the market. But till the time Nifty is not going about that level, till that point of time we might witness some supply from the upper end. Hence we have seen in yesterday's session that the put writer got added up strongly between the range of 21,200 to 400 level, because in the yesterday's previous session we have seen that the Nifty came down sharply, due to which the call writer positions got heavily added on and the put writer got liquidated. In yesterday's session we have seen that the short positions have got liquidated in some front against that the put writer got added up. But again in today's trading session, once if Nifty goes below 21,300 level, then again we might witness some selling pressure. So currently in today's trading session we might see some range bound momentum between 21,300 to 21,500 range. And if Nifty goes about 21,600 range in coming week of trading session, then we might expect a fresh leg of a buying in Nifty related stocks and also index front. While on the stock specific and sector specific front, a counter that looks positive in today's trading session first would be Nalco, National Aluminium. We have seen that the fresh long position has been witnessed from last 2 to 3 weeks of trading session. In yesterday's session, we have seen that the breakout has also came out sharply in Nalco, and also the IV's position on the call buyer front have added on. So we expect the buying trend will be seen in National Aluminium. New long position can be created in today's trading session. Another counter that looks positive is Pidilite and Bank Baroda. These three counter looks positive in today's trading session. While on the negative front, Delta Corp, Axis Bank, and IDFC Limited. These three counter looks negative in today's trading session. So that's it from the derivative front. Thank you.
Good morning. Ujjivan Small Finance Bank result is in line with expectation. Advances grew 4.6% sequentially, 27% year on year. Net interest margin was stable at 9.8%. OPEX was elevated at 11% sequentially and 31% year on year, resulting in profit before provisioning declining by 5% sequentially and growing by just 18% year on year. So OPEX played spoil spot during the quarter. Credit cost was, is now beginning to normalize to 0.9% from previous low levels. We have seen that since last 6-7 quarters, credit cost was at very low levels because company had upfronted a lot of provisioning. So now that will normalize and keep inching higher. And we think that profit, all the profit is in line with estimates, but higher OPEX during the quarter will be a dampener for the near term, but we remain positive from long-term perspective. Canara Bank result is above expectation, mainly due to lower credit cost, which came at just 0.8% against expectation of 1.2, 1.3%. And even previous quarter, it was at 1.1%. Slippage ratio is stable at 1.3%. Net interest margin is also stable at 3%. So overall, decent set of numbers from Canara Bank. We are positive. Mass Financial Services result is in line with expectation. AUM grew by 7% sequentially, 27% year on year. PAT growth was 4% sequentially, 24% year on year. Asset quality was stable with net NPA of 1.5%. We remain positive in long term on Mass Financial. PNB Housing Finance result is below expectation due to a steep decline in net interest margin. All other parameters were stable, but NIM came at 3.65%, even if we were to adjust for one-offs. against previous quarter 3.9%. So it was a steep decline, which dented the profits. We are neutral in the near term because of the NIM issue, but positive from long term as retail mix is now at 96% of AUM, and slowly the loan growth of retail book will start reflecting in the overall loan book. So we are expecting that maybe next 3 to 4 quarters, overall loan growth can increase from single digit currently to around 15%. DCB Bank result is in line with expectation. Net interest margin declined by 20 basis points and came at 3.5%. Bank expects NIMs to start trending towards the guided range of 3.65 to 75% over next couple of quarters. This will be supported by a change in mix of loan book from home loans to LAP and business loans, which have 1% higher yield, and also some portion of the mortgage book is yet to get repriced. Asset quality was stable. ROA has been at around 0.9% to 1% range since last 7-8 quarters. So it's in that range as well for this quarter. We are neutral from a near-term perspective, but positive from long-term point of view. Thank you.
Good morning. Yesterday, there was a con call of Havells India Limited. The management highlighted that they are among top 4 players in terms of market share, and in the Lloyd segment performance, they are long-term positive. The B2B segment has observed strong demand on account of sustained infrastructure spends. This is mainly in urban areas, and B2C segment has slowed down due to inflationary impact. The management expects B2C segment to perform well in FY25. In terms of segment performance, switchgear segment grew flat at 1.3% on a YY basis, where exports were impacted due to slowdown in Middle East and Africa region. Cable segment delivered healthy growth of 11.4% on a YY basis. However, the segment margins were contracted by 114 basis points on a YY basis. This was because cables proportion in the revenue mix was higher than wires, as wires is a higher margin business. Lighting segment has delivered strong volume growth. However, price decline in LED prices impacted the value growth. Electrical consumer durables revenue observed muted growth on account of high base in fans during quarter 3 FY23. Small domestic appliances portfolio has been benefited from the festive season. Also, Lloyd segment performance, Lloyd segment revenue grew by 6.8% on a YY basis, which was reasonable growth, being a non-seasonal quarter, and it has gained market share over the last 2 years. The management is going to focus on its branding, product portfolio, and distribution expansion in order to penetrate further. And also, it has set up a subsidiary in US to promote the room air conditioner exports. The stock is trading at a PE of 48 times to FY25 EPS, and our view is neutral at present, given the near-term challenges in B2C segment due to inflationary challenges. However, long-term story is positive and can be looked to enter at any dips, as it is currently trading at a fair valuation. Pidilite Industries also held a con call yesterday. It has observed broad-based growth across categories with double-digit volume growth. Exports remain strong with double-digit volume growth. It has seen uptake in construction activities backed by increased government spending. This is expected to drive the overall growth. Also, it has continued to expand distribution touch points across urban and rural, and innovation also one of the key growth driver for the business. In terms of newly announced lending business, pilot has been set up. Pilot is expected to set up over the next 15 to 20 days in southern India, and it has guided for double-digit underlying volume growth during FY25 with operating margins in the level of 20 to 24% level. The stock is trading at a PE of 60 times to FY25 EPS, and our view is long-term positive. On the result front, Lakshmi Organic Industries Limited result was below expectations. Revenue grew by 6% on a YY basis, and EBITDA margin reported at 7.5% versus the expectation of 8.9%. The stock is trading at a PE of 37 times to FY25 EPS. We'll provide the further insights post today's con call. Thank you.
Good morning. Bajaj Auto result is above expectation as revenue came at 12,113 crores, which grew by 12.4% on QoQ basis, and the company expects 8 to 10% growth in coming months. EBITDA margin came at 20.1%, which is driven by higher realization, cost management techniques, and operating leverage. Domestic motorcycles thrived and it doubled the market growth, fueled by a 125cc plus segment. The company has also reduced prices on selected models in domestic and export markets to reset relative competitive positioning. Pulsar also recorded all-time high sales of 40,000 units in quarter 3, which actually led to market share of 40% as compared to 32% last year. On the export side, volume slightly rose due to increased demand in LATAM countries and Asia, and premium bike export, which actually counteracted to the challenges faced in Africa, especially Nigeria. Also expanded Chetak business to 15. It is planning to expand Chetak business to 15,000 units per month based on new launches and good supply chain support. Also, recently board approved buyback of 4,000 crores under tender route at rupees 10,000 per share. The impact will be seen in next fiscal year. It is planning to invest in EV to expand its presence in 50 cities in quarter 4 and thereby 200 cities by FY24. At present, the stock is trading at PE of 28.5 times of FY24 EPS. TVS Motors result is broadly in line with expectation as revenue came at 8,245 crores, which grew by 1.2% on quarterly basis and 26% on yearly basis. EBITDA margin is stable at 11.2%. Two-wheeler export units sales were booked at 2.17 lakhs versus 2.07 lakhs units last year, and the total three-wheelers registered sales of 38,000 units versus 43,000 units last year. For TVS iQube, the company has already touched 400 touch points as of now, and it is planning to double it in next 3 months. It has discontinued Scooty Pep product to focus on growing other products like Ntorq, Jupiter 110 and Jupiter 125. The capex of 1,000 crore is planned for FY24. With focus majorly on EV side. The stock is trading at PE of 45.9 times of FY24 EPS. CEAT result is marginally above expectation as revenue came at 2,963 crores, which grew by 3% on quarterly basis and grew by 8.7% on yearly basis. The revenue growth was particularly fueled by replacement and international markets. EBITDA margin came at 14.1%, which declined from 14.9% sequentially. The company had experienced margin pressure due to steep increase in raw material prices, and in the next quarter, CEAT is planning to launch trucks and bus radial and passenger car radial tires in US market in the replacement market. The stock is trading at PE of 18.3 times of FY24 EPS. Balkrishna Industries result is below expectation as revenue came at 2,279 crores versus expectation of 2,313 crores, which grew by 2.4% on quarterly basis and 6.4% on YOY basis. EBITDA margin came at 23.6% versus expectation of 24.7%. And further insights will be provided after today's con call. The stock is trading at PE of 37.2 times of FY24 EPS. Thank you.
Apart from this, two South-based cement company reported result yesterday, and both have reported results better than expectations. Volume growth came somewhere at around year-on-year growth of around 8%, and for Dalmia Bharat, and similar for around 14% for Sagar Cement. Sagar Cement, there was some benefit of acquisition as well. So EBITDA pattern also had come a bit ahead, has improved both for Sagar Cement and Dalmia Cement, both quarter on quarter and year on year. So outlook for cement looks positive in near term. Tata Steel also reported results above expectations in this quarter, but the outlook seems neutral for steel companies in near term. I'll request commodity team to take up from here.
Yes, sir. Thank you very much. Good morning, everyone. So in today's session, gold is likely to trade in a range from 61,800 to 62,200. From couple of days, prices are trading in this range, and prices are resisting 62,200 to 50 on upside. So there could be some range bound movement, and it is recommended to trade within this range. However, silver looks positive. One can initiate a buy around 71, say 450, and maintain a stop loss of 70,800. On upside, 72 to 50, 500 profit taking is recommended. In crude oil, prices are heading for 6350, 6400. So buying around 6250, 6230 is recommended, and maintain a stop loss of 6160. In natural gas also, prices are expected to test 230, 235 on upside. So buying around 215 is recommended with a stop loss of 205. In copper, the February contract, we recommend to buy around 727 and maintain a stop loss of 723. Similarly, zinc also, one should initiate a buy around 227, 226.50 and maintain a stop loss of 225. On upside again, 229, 230 is the target we are eyeing for. So that's it from me. I'll ask Utkarsh to take the call forward.
Thank you, sir. Very good morning, all of you. For today's trading session, we are expecting very sideways momentum in USD INR in the range of 83.07 on the lower end and 83.20 on the higher end. So one can initiate a short positions around 83.18 levels to 83.20 levels with a stop loss of 83.24 for the target of 83.09 levels. And on the lower end, one can initiate a short positions for intraday purpose around 83.07 levels with a stop loss of 83.05 for the target of 83.16 levels. In GBP INR, one can initiate a long positions if we get some more profit booking around 106.60 to 105.60 to 105.50 levels with a stop loss of 105.27 for the target of 105.80 to 105.95 levels. In Euro INR, one can initiate a long positions around 90.40 levels with a stop loss of 90.28 for the target of 90.61 and 90.75 levels. Thank you.